there are moments where the odds are so high that it's not even smart to be cautious when they're that high. And then there are moments where the odds are 50, 40, 60. Then, you play kind of cautiously. But there are these moments where it jacks up to 92% odds of success. You've got to put all the chips on the table. I'm going to teach you which strategy my traders put everything on the table with. They're told to do this with my capital, that when this event happens, they take every dime, every dollar that is left, and they put it on the line with this event. Then we're going to take a 40-minute break or so after this talk, and my next talk, which is scheduled at, is it 1 o'clock? 1 o'clock? Yes. Okay. At 1 o'clock, I'm going to give you the second one, and that's the number one tactic we bet all and we borrow and everything. These two events can literally make you wealthy. And I dare you to try to prove me wrong with this. I dare you to go out and get some experience with these two tactics and come back to me and say it doesn't work. All right? For 18 years, no one's been able to do that. All right? So the kamikaze strategy, when to risk it all. Now, yesterday, I'm going to skip all of this stuff, right? Yesterday, I talked about 3 power bars. 3 actionable bars on the buy side, 3 actionable bars, 3 bullish actionable bars, and 3 bearish actionable bars. I focused a great deal of attention on what I call elephant bars, the big, giant, elongated green ones, and the big, giant, elongated red ones. I'd like to focus today on the middle one, the bottoming tail bars with a little bit of color typically. Now, the color at the top really doesn't matter all that much. That can just as well be red, and it's just as powerful. Maybe a little bit less, but just as powerful in essence. All right, and your topping tail. The bottoming tail is at the bottom. Now, the bottoming tail bar is really sort of the same as the bull elephant bar, because the bull elephant bar rallies from this price, zoom, all the way to the top. Well, a bottoming tail bar was a solid red bar that all of a sudden the bulls start to push the market back up, and in their push back up, the red is eliminated. And then what's left behind is the shadow of where the bears used to control the market. The bottoming tail bar is a shadow. It is the graffiti mark of where bears once controlled the market but lost control of the market. So bottoming tail bars are exceptionally powerful. They're 180-degree turns. Now, here's a general guideline. Their market is made up of 2 struggling football teams, Bulls and Bears. You always give the benefit of who had the ball last. So here is the ball being controlled by the Bears. But then they could not hold on to the ball, and now the ball is in the hands of the Bulls, and whoever has the ball last is the one you bet with. Okay? So Bulls have the ball last. Now, you have colored bottoming tails and you have non-colored bottoming tails. They're just 2 different versions of the same bar. But this bar, like the elephant bar, is one of the most potent bars in existence. And if you can sit in front of your monitor and simply wait for bottoming tail bars to form, if you can do that, and then more importantly, if you can buy them, buy into the bar right before it finishes trading. Every 5-minute bar is simply recording ticks in the market over a 5-minute period. But the last few seconds of that 5-minute period, that's when you buy if you are trading 5-minute charts. If you're trading daily charts, the last 10, 15 minutes of the trading day, you buy into that daily bar. All right? And if you want to keep a real tight stop, you put your protective stop under the bar you buy. You see, if that's the bar if this is the bar that made you want the financial item, the stock, the currency pair, whatever it is, then why would you still want it if the reason for your buy just got eliminated? That's why it's appropriate in most cases to put your stop under the bar that received your money. Okay? That's the bar that gave you the reason for acting in the first place. So we buy into elephant bars right at the end of their formation. Why not in the beginning? Because what if they don't stay elephant bars? What if this is a daily bar, in the first 2 hours it's a bull elephant bar, but toward the end of the day, all the green disappeared? No, I want to make sure that this is truly the footprint of an institution. Now, what I mentioned to you yesterday, if you'll recall, is that these are the only 3 footsteps that mark when institutions are acting together in tandem at the same time. You can't form a bottoming tail bar with our money, your money. We could pool all our money together. And if you go to the stock IBM and we can buy at the same time and the stock won't budge, right? It takes billions of dollars to produce a bull elephant bar. These are the footprints of institutions, right? They want to be anonymous. They want to not be detected when they're doing their most important work, which is accumulating, but they can't hide from the astute chartist. Now, here are the opposite versions of the elephant and the tail bars. All right, if we were shorting a market, we'd short into these bars toward the latter part of their formation with a stop above the bar's high. And I find that stop above the high a great shorting. This is a great tactic for shorting. All right? Remember we talked about how stocks can get far above the 20, but they can't stay? Well, stock gets far above the 20, then produces a bottoming tail bar, short, stop. Your maximum loss is just 1 bar. All right? What if you could keep your loss on every trade to just 1 bar? Every time I lose 1 bar. But when I win 13 bars. I win 18 bars. I win 9 bars. I win 4 bars. But every time I lose only 1 bar. That's the way you stay in this game forever. All right? Now, let's focus on the bottoming tail kamikaze event. There are 2 types of tail bars. There's the regular tail bars, then there's the kamikaze. This is what we want to focus on. These bars form way below a 20-period simple moving average. Now I want you to understand that we do not look at any chart without a 20-period moving average on it. The simple version. I've found in 24 years no evidence that the sexier varieties work any better than the simple. Exponential, weighted, triangular, right? Just human attempts to make something perfect that can't be perfect, right? Simple 20-period moving average. Now, the 20-period moving average is very similar to the vertebrae of a stock, all right? It's the mean. Stocks can get away from it, but there's a rope on the foot of the stock, and the other end is attached to the 20. There's only a certain distance away from the 20 that the stock can get. It can get above there, but it can't stay there. It can get below, but that rope attached to the stock in the 20 will run out, and then the 20 will pull the stock back up. So stocks vacillate above and below their 20-period moving average. Now, the further away from the 20, right, typically the more violent the snapback, just like a rubber band. Okay, just like a rubber band. Now, what we do is we're looking for a kamikaze event in the form of a bottoming tail that forms well below its 20-period moving average. Now, this is not a kamikaze bottoming tail. This bottoming tail is is even though the lowest is relatively far below the 20, I would say this is a regular bottoming tail event, although it's a buyable bottoming tail bar that did lead to this advance. So my traders would buy into that bar. Now, because of the exceptional length of that bar, they have to make two choices. Do I skip this trade because my stop under that bar's low is too big based on my trading plan? My trading plan says I can't lose more than $350 on a trade, but if I put my stop under that bar, my loss is going to be $625. So I've got to either cut my buy in half to adhere to my trading plan or not take the trade. Does that make sense? You adjust the size to match what rules you set for your own trading. Now, as you can see, this bottoming tail led to an up move. However, here is a kamikaze bottoming tail. It is a bottoming tail bar that has formed well below the 20-period moving average. Now, I typically measure from the low of the bottoming tail to the 20-period moving average, but I want to see some space between the top of the top bottoming tail bar and the 20. There must be air above the bar. This one did not have air above the bar, so theoretically it's not a kamikaze bottoming tail. I want that bottoming tail bar based on the low to be far below the 20, and I want some air above the bottoming tail bar between the top, the head of the bottoming tail bar, and the 20. This qualifies. I want my traders to take everything in their account to buy into that bottoming tail bar right before it finishes. Their stop is under the low, and the rest is history. This, what I mean by kamikaze is, you're either going to make a lot of money with this, or you're going to get stopped out one bar. There's no in between. This thing is going to rock, and it's going to rock for a long while, or you're going to lose one bar. And I will tell you that there are so very few that make a little bit of money. They either make a lot or little. Now, I will tell you this. When you get a bottoming tail kamikaze scenario, the odds that this is the final low is so high that this low will not, I teach my traders in the seminar, this is on a slide. You have found the low in this stock forever. Now, is that really true? Probably not. But it's almost true. These bars put in the final low so dramatically that it is rare when you see this low even revisited a little bit for a long, long while. Now, I will tell you this. Many people are trying to find the truth in the market. All right? That's not what this is about. This is not about the truth. I lie to my traders all the time. If I have to lie to get you to press the buy button at the right time, I will lie my little hiney off. Do you understand? I will do whatever it takes. All right? We do it to our children, right? Don't open that door. A monster's in there, because it's dangerous for them to open the door. All right? So for you, if I lie to you and say, when you see that bar way below the 20, it is the low forever for the rest of the stock's life, for the rest of your life, for the rest of your children's lives. So bet everything. All right? I don't want them tentatively guessing. I want them going all in. Now,